So Bitcoin is now 7 days up in this swing. We have overbalanced time and price of the last move up in purple, and we have also broken above the highs of this consolidation range, meaning that this consolidation from January to May is now stronger than this consolidation from November to January. Meaning that if I switch on my yellow trend lines here, the next leg down, projected from high to low, consolidation range to the low of the next dump, is now unlikely to drop below $45,000. And if I just copy this yellow line again and I show you the first leg down, you can see the second leg down was actually slightly bigger than the first leg down, depending on whether you consider this to be the start of the dump, the 117k lower high, or the 126k all-time high. Now, for the purpose of, should I say this, I'll just consider the actual all-time high as the strongest leg, as the first leg down. So assuming we're in a bearish 3 impulsive wave, 2 correctory wave, an Elliott wave 5 drive pattern, a 1, 2, 3, 4, 5 to the downside, for this to be a valid pattern, because wave 3 here from January to February was shorter than this, should I say, wave 1, this means the wave 5 will have to be shorter than the wave 3, meaning the bear market low will probably be above 45k. And if I redraw my Fibonacci extension using the current high, since Bitcoin has pushed up again, we've got a 150% extension at $49,100. So I do believe Bitcoin could bottom around 50k, meaning anyone that bought around 60k is now obviously in a juicy profit. But even if they bag hold into the next cycle, should 49.50k be the bottom, they would have sniped a pretty decent price, similar to anyone that bought the lunar crash low at $17,500 compared to the actual FTX low at $15,500. That was around a 10% difference in price. And if, obviously, being a 10% difference in price, however, look at that. That was a 5 month. That was a 5-month period where price went slightly higher, but still ended up making a lower low. And even though we made that lower low, Bitcoin took another 3 months to get going. So from this first capitulation low, it was 8 months before the bull market truly began. Whether you want to consider this November to January period as a bull market is up to you. In terms of cycles, technically it's a bull market, but it definitely didn't feel like one, and it wouldn't have looked like one on your portfolio until we got that massive breakout bar in January. So back to where we are currently. If February was that first low and Bitcoin takes 8 months to actually get going again, was it June to January is 7-8 months, something like that. It's very late at night here, as you can see. My brain is not working too well. So potentially you might see a September-October breakout. Maybe we see a major low in, June, like my wave projection is showing, or July. Now, if you're a TIA member, you'll know that there's a lot of time pressure around this May-June period. And obviously we've got the sell in May and go away. The thing that everyone talks about, but never actually does, because, narrative this, narrative that, Trump's going to save the world, he's going to solve the Strait of Hormuz problem, blah, blah, blah. I can't remember what the narrative was last time in May. I think it was this in 2024, when it was like sell in May, go away, everyone was saying, look, we've made a lower high, we need to sell, price is going to dump. I mean, price did dump, but who actually sold there? Who was buying every single dip here and getting liquidated? And if we look again in May of 2025, we had that 112k peak. Sure, it wasn't the all-time high, but if you exited your full position at $112,000, you had your chance to buy back at 80k, 60k, price is still around 80k now. Anyways, enough of the long-term analysis. Now let's focus on the shorter term timeframes. You can see on the monthly time frame, shorter term time frame, yet I zoom out to the monthly, but current price action is what we're going to focus on rather than future price action. The monthly BX trender looks like it's primed to print a second higher low. However, we're only 6 days into this trading month, so anything could happen. And we are approaching this 382 Fibonacci level, which you can see previous lows could become new tops. So we'll have to see how Bitcoin reacts to that level. If you've been watching other channels on YouTube, such as More Crypto Online, that I now follow quite closely, you'll understand the top of this CME gap that was formed through here in January is $84,000. So a lot of resistance lining up at $84,000 to suggest a potential top for this rally. But for now, trends are still up. The weekly is also rallying into resistance. The BX trender is now 4, 5, 6, 7, 8, 9, 10 weeks of higher low, higher high price action. So it could potentially be due for a breather. Like just in terms of light green weeks, we're 8 weeks light green, which suggests, if we look at past cycle analysis, that Bitcoin probably won't go much lower than the $60,000 low. Because if you look through here in 2022, buying pressure was showing up this entire time. But until we actually get that breakout above the 33 fair value band, it doesn't matter how much buying pressure there is, it's still a bear market, and we can still take out the previous low. But being green on the weekly BX trender means we're not going to take out that low by much, most likely, as I talked about earlier in this video. Now, the other thing I want to talk about is Bitcoin is now 6 weeks straight up in a single swing. And if we do a little bit of backtesting, you can see we've only seen 7 or 8 week moves up a couple of times in the past, typically in a bull market into very significant tops. In fact, we only saw, I think this bear market, we had an 8-week move down in the 2018 bear market. We had a 7-week move down in the 2018 bear market. 8-week move down in the 2019 pre-COVID dump. So you can see on the Binance chart, even in bull markets, there were very few 7 or 8 week moves up. And in a bear market, that's pretty much unheard of. Now, I may come back over the weekend and make a longer video backtesting weekly swings, because it's late at night here and I'm pretty busy during the week. So for now, just keep in mind, we are very long in a weekly swing. So now is probably not the ideal time to be looking for new entries. Like last week, this, you can call it a reversal candle, whatever you want to call it, where you get a long wick to the downside, a strong close. That was probably your opportunity to get in on a long, and 78.7 through to where we are now is still around $4,000 per Bitcoin. But even if you took that move, your stop loss, if you stuck it underneath that week's low or the previous week's low, would have been 4 to 5k per Bitcoin. So it would have been a coin toss trade. Not the sort of trade that I want to be doing, but obviously you do you, and if you got in, congratulations. But make sure you remember the weekly fair value band is now resistance. On the daily time frame, we have this upward channel trend line sitting here at around 84.8, which is just above the CME gap, which you won't see it here because this is a Binance chart. I don't actually have a CME futures chart open, so make sure you go watch some other channels such as More Crypto Online if you want to get a more detailed look at that CME gap. But for now, we are 7 days up in this swing, and anyone chasing longs, you know, if you're looking for, let's say, a daily close back inside this consolidation range, so, you know, as the age-old saying goes, don't trade breakouts, trade failed breakouts. So if you are wanting to get in on a short trade, such as this yellow line, remember, we do still have a first layer of support at $80,600. So if you're jumping in long now, the first layer of support, you know, you've got $1,600 per Bitcoin to play with. That's a 2% buffer. The next layer of support is the, I guess you could see the little double top here at around 79.5. Below that, you've got the 236 fib, which, provided price doesn't come down in 1 or 2 candles, if we take a few days to get back there, down there, would probably line up with this trend line from the correction low to the third higher low, which comes in around 77.5. And if price falls below that, we've got a 382 fib, which I believe lines up with the point of control. I have turned that off to clean up my chart a bit. Let me turn that back on. Sorry, no, the point of control is actually a bit lower. That lines up a bit better with the 50% level. I was wrong there. But yeah, so you've got a 382 fib, which lines up with some previous highs and lows at 74.2. You've also got the 50-day TMA, which lines up pretty well with this lower trend line. And obviously you've got the 50% level just underneath it. So even if we were to see some absolute flash crash, we've still got quite a few layers of support. And I think this 71 to 73K region is going to act as very, very strong support. So anyone that's getting super, super bearish right now, I would ask you to stay a bit more objective. That being said, you know, no one's saying Bitcoin couldn't print a minus 13K bar tomorrow and we close underneath the 50% level because Trump decides to do something with Iran or whatever. But I'm just saying the likelihood of something like that happening in 1 or 2 days is very, very low. And even if price were to come down there, I suspect it would potentially take, you know, a month or so, maybe at least 2 weeks, because you can see these last few drawdowns from 14 January to 6th of February takes, you know, 2 to 3 weeks. So, and obviously we're going to have some relief bounces along the way, like you can see here. We flushed out, what is it, $34,000? $4,000, yeah. Late night maths. So we flushed out $4,000, which was 5%, immediately recovered it the next day, flushed out again, and you can just see how messy some of this price action is through there. So don't expect the move down to be straight, even if it does happen. On the 4-hour time frame, you can see we're pushing into that +1 standard deviation band, and we have tapped it in the last 4-hour candle. You can see typically when we tap the +1 standard deviation band, price at minimum chops sideways for the next few days, or it throws in a, you know, $2,000, $3,000, even like a $4,000 or $5,000 correction. So since we have tapped that level, I think the chance of us retesting some of this upper trend line here on the micro timeframes, which is actually the lower trend line from the 67K fourth time breakout, I would not want to see this lower trend line on the micro time frame get tested, because that would potentially be a 5th time breakdown. And you can just see here something that I posted about in the Discords that I'm active in. This was a failed 4th time breakdown on the 4th of May pre-market. So just before the Monday pre-market, just as pre-market opened on Monday for the US session, you see we saw a failed 4th time breakdown, a week below, closed back above, strong reversal, and depending on where you entered, you would have had anywhere from a $2,000 to $4,000 move per Bitcoin. And obviously, if you were trying to catch a move like that, you might be down on the 1 hour or 15-minute or 5-minute time frames. So, on a time frame that short, a 2.5% move, if you're trading 50, 100x leverage, is still a very nice trade opportunity. But obviously on YouTube, for now, I'm not going to cover these short-term time frames. Maybe someday I'll do live stream trading sessions, but that day will not be today or any time for now. On a 4-hour time frame, you can see volume looks like it is drying up a bit as price grinds upwards. You can just see we had our big volume spike on the 1st of May as the Friday session, as the US market, just as the US market was about to open. The US market opens at 23.30 UTC plus 10, and this was obviously the 2200 candle. So as the US market was about to open or opened, I can't tell because it's a 4-hour candle, we got that nice move up. But declining volume on the 4-hour, declining volume on the daily as price grinds higher. On the weekly, I will just switch on the volume. Yep, declining volume on the weekly. As Michael Pizzino always says, low volume rallies are not to be trusted. But, here is the key but. Price for now is still in a 3-wave move up. You can see I've turned on the average true range, and this just shows the volatility is drying up a bit. So price is grinding up, but there's not much interest in the market, it seems. So compared to what was happening back through here in February. So I don't actually have much analysis to talk about there. Other than where average true range is around $2,100 per bar. These last few days have been, around that mark. Yesterday was, I think, just under 2K. Today was, like 1.7K, 2.1K to peak, yep. So if we see like an 8th or 9th day up, where we see a monster bar that is, twice the average true range or more, so like a $4,000 bar from wherever we close today. So say we close around mid-bar, let's say $82,000, and we see a huge move up to $86,000. We just break above this trend line, smack into these some of these previous lows here, and then if the market reverses or something, that would probably mark a top for this rally. Typically, when you see an extreme move at the end of an uptrend, that tends to mark the top. And what I'm saying is now, I had the average true range up. We haven't actually seen that extreme of a move. So this uptrend could continue because we haven't seen that extreme of a move. And maybe, just maybe, we consolidate sideways here for a bit for another leg up. And if you've been watching more crypto online, his Elliott wave analysis suggests there could be another move up, depending on how you draw the 1, 2, 3, 4, 5 through here, and from the 67K breakout. Now, you won't be able to see my Elliott wave count because I drew it in black and I'm in night mode, but I may do a revision on that in my next video that I could get out tomorrow. I might not get out tomorrow, we shall see. But just thinking of this entire range as Elliott waves, even though we've overbalanced time and price in this C wave, it just means, like I said earlier, the next move down is likely to be less severe than this move right here. However, it does not mean the bull market is back on. So everyone is saying you've missed a low at $60,000. But if you go back and look at history, Bitcoin bear market lows are not just bring up my daily chart. The bear market low is typically not just a 1.5 month, 2 month sideways chop with a whole bunch of volatility and wild swings. Like the bear market low, look at these candles here. Like we were basically flat. Like each week saw a maximum range of like, about 10% or so. Whilst through these days through here, we were getting like swings in just 2 or 3 days that were like 20% or something either way. So it just felt too volatile to be a true low, because as Jason says, lows are formed when everyone looks the other way. And if everyone bought this $60,000 low, which you can see on this violent reversal, then that would make the masses right. And the masses never get it right. Or else everyone would be a millionaire and no one would be a billionaire. So, in my opinion, there is still another leg down. I think we're in a period like this here, similar to this October 2022 period. And that analysis will get invalidated if we see 5 waves up. So wherever this top forms, if we get a pullback, let's say to the 50% level, and instead of, just seeing a bounce into a lower high, we bounce and form a higher high. So let's say price comes back to 71k, then makes another leg up to say 90k, then this could be the first leg out in a bull market, meaning that this would be a higher time frame, wave 1, where we've seen a 1, 2, 3, 4, 5, and we would see a higher time frame, wave 2 pullback. And maybe this higher time frame, wave 2 pullback, comes to 72k, 67k, 65k, but it cannot take out this 60k low. So if we get something like that, and the sentiment feels a lot like March 2023, where we see a higher time frame, higher low, but, the sentiment feels just as fearful, if not more fearful than the actual low. Everyone's screaming recession, the AI bubble has burst, or, the Iran war is going to go nuclear, the world is going to end. And that ends up being a higher low than $60,000. That could be, a multi-year buying opportunity, similar to this March 2023 low, where obviously price just made higher low after higher low before we got the ETF breakout and the raging bull market. So that is it for chart analysis. I'll take a quick look at USDT dominance. You can see we're heading towards that 6.7-ish% target that I've been calling. Potentially this old high becomes a new low. But for now, we are still holding the weekly fair value band. And if we go back in history, you can see in previous bear markets, we can test the bottom of that weekly fair value band without actually breaking underneath it, except when the tide starts to turn. So potentially we'll come down to 6.9-ish%. Maybe we get a type of history doesn't repeat exactly, but it rhymes, and we just break the bottom of that band but see a fast snapback. The thing that will make me think the bull market is starting is, instead of getting a big snapback on USDT dominance, a green bullish engulfing candle that reverses the previous week's move down entirely. You can see examples here, 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 and here. If we start to see multiple weekly closes underneath the 33 fair value band, then maybe, my analysis is wrong and the bull market is actually beginning. And maybe, we don't get the exact low at $60,000, but we get in on a monthly higher swing low, similar to what we saw in 2023. That forms at, say, $71,000 or $67,000, whatever it ends up being. Other thing to note is the DXY is breaking down. However, we have buying pressure on the monthly time frame, so this move down on the DXY actually looks weak, meaning we could potentially still see a double bottom right now and another failed move down equals fast move up on the US dollar index, the DXY. And you can see that on the USD AUD pair, we've seen a nice red candle to the downside. So you can obviously chart this in your local currency if you're not in Australia. And if we look back at my previous video, we have obliterated that $82,300 short liquidation cluster on the Hyperliquid map, and took out all these liquidation clusters on the 81 to 82.3 level on the Bitcoin exchange maps. You can see daily exchange volume still pretty pitiful, meaning, as I said earlier in my volume indicators, this is still a low volume rally, and low volume rallies are not to be trusted. Bitcoin Fear and Greed Index is still sitting around neutral, not much to talk about. The FOMO Finder has popped back into uncertainty, but the funding rate has returned to normal according to this. So, potentially, because the FOMO Finder is still in uncertainty, we might see one more day up, make it 8 days up, maybe even 7 weeks up. But I think that 7 weeks up is a lot less likely. I think it's much more likely we top this week. Maybe we see 8 or 9 days up, which I have not actually backtested in a bear market before, and I'm not going to scroll all the way back, or we're going to be here until tomorrow morning. But as I said, if we get a very big candle that's $4,000 or more tomorrow to wrap up the trading week, Thursday or Friday, and the FOMO Finder ticks back into either balanced or, better yet, canary call, as Jason likes to say, the masses always have to get it wrong at the peaks. You have to get mega bullish right before price rolls over. This day was massive ETF inflows, I think 14th of January, as Jason covered in his channel. And the other thing to suggest that a top could be close is the long-short ratio. It's not 3% out of balance yet, but whoops, this page has been using a lot of battery. Surprise, surprise. The liquidations are picking up. We're approaching that $500 million short liquidation mark. And if you remember me talking about, typically when you see around $500 million of short liquidations, it marks very significant tops, because people don't short as much as they long. So those $500 million short liquidations can often mark local tops in consolidation ranges, or if price has been trending up very strongly in a bull market, that can mark very major tops. But typically on the long side, you need to be seeing closer to that $750 to $1 billion liquidation level to mark major lows. That's pretty much it for today. There's not much more I can talk about, other than the fact that if I was long, I would absolutely be taking profits. And if you're in the Discords that I'm active in, I have been talking about the fact that I've closed parts of my long. I'm not closing my entire long because, if you got in at a good price in like the high $70,000 region, I'd be looking for a break down from this $80,700 level, or the daily swing to turn down before looking at shorts or closing my long entirely. Because, as Michael always says, the trend is your friend until the end when it bends. Everyone, including me, got super bearish through here, but we bounced right off of support and the trend continued upwards. Anyways, thank you all for watching, and please like, comment, and subscribe. Goodbye.